August 7th through the 11th this week. Over 1,000 companies reporting earnings. Let's get started. First things first, we know there's risk in trading. Please always use trade capital only. You know the deal there. If you're following me on social media, make sure it's me, youtube.com/Chris Pulver, verified account on Twitter. If you can join my Discord channel, all are welcome. I'll post a link of that in today's YouTube session. Let's jump into the charts. Here's the economic calendar. Let's go to high impact. Well, yeah, let's go medium and high for this morning and go all week. I think we have CPI data for the US this week. We have Chinese CPI data coming out Tuesday. Let's see here. New Zealand inflation expectations, CPI for the US on Thursday. So we'll see how the market shakes around Monday, Tuesday, Wednesday. Pretty light on the calendar side. Thursday, CPI, that's going to be a big one, of course. Unemployment claims. Fed speaker there on Thursday as well. That's after closing bell towards the end of the day. Friday, pound GDP, PPI numbers again, inflation related news on Thursday, Friday this week, and then U of M sentiment, which has been beating expectations for the most part the last several months. All right, let's jump into some charts. I'm just looking at the market. We just hit opening bell. We had a close last week around 446 and change. We're up to 449. There is some vulnerability to the downside. Here are a couple of gaps that I'm watching. So this gap to the downside right here, let me put in a horizontal ray. Actually, so this yellow box that I have on my screen, if everyone can see this, this is the higher time frame swing. If we're going to have a correction, this is kind of the correction I was looking at for the SPY. I have the same thing for the Qs. You go to a higher time frame here. Right here. So I just took a big price swing from low to high. I could take this all the way down as well. Somewhere in there. Okay. But we had a low high. We had a pretty obvious pullback. So that's where I plotted that swing. The 23% to the 38% Fibonacci levels still, down lower. I just want traders to keep this in perspective. I mean, August, September typically are, bad performing months or bearish months for the markets. A correction is very likely due. If we get into the first part of this correction, that's a 6%. That's a 6% drop from the top on the Qs, potentially down to a 10%. So 6 to 10%. That's what I'm looking at for corrections on the Nasdaq. Again, these are kind of healthy technical corrections. And then the SPY, again, pretty obvious swing from low to high, 23 to 38% fib from these recent highs. I think this gets us kind of the same thing, like a 5 to 7%. Don't delete that. So that would be about a 4% correction to about a 6.5% correction. Obviously, we could not pull back that far. We could go back deeper. Previous resistance back here around 420. That's a big level. Just in case price wants to test that. We could also look at a larger trend line, something like this, where you connect these lows, give us some trend line support, something a little bit more aggressive perhaps in here. Okay, so I'm not going to get this chart super messy. This is the one that I want to trade on a daily basis. So I'm really just kind of mapping out my levels. But I still think, downward pressure remains. We had yields pushing up higher. I think it was the three-year yield pushed to new highs last week. Or at least it tested it. Was it the 3-year? 3-year at 4.47. Was it the 3-month? The 3-month poked up towards 5.25. Man, it's just hanging out here at 5.25. This is the 3-month Treasury yield. The 1-year had a big spike higher at 6%, came all the way back down. Now we're at 5.3. If we compare the 2-year and the 10-year, that's our inverted yield curve measure. The 2 years at 4.79, we'll just call it 4.8, and the 10-year is at 4.07. So we're 0.73% still inverted. That's a concern, right? That's what has kind of recession talk. That's been just an old indicator. The old 2 and 10-year, and then the 3-month versus the 10-year also has been a big indicator as well. Okay, so let me jump into YouTube this morning and say good morning to everybody. Discord channel's up and running right here. Good morning, traders. We're live on okay. So should have posted there in YouTube. Yep, it's my little YouTube bot. All right. And let's go with our chat this morning. Chris, good morning. Catherine, good morning. David, good morning. Donna, good morning. Ranjit, good morning. FK, good morning. Andrew, Gary, good morning. And what's happening? Morning, everybody. Happy Monday. Okay. So here's our SPY. Pullback levels we've noted. So going back to the SPY right here, we pull back into this area. I will start looking for some bull put spread action, probably spaced out through Q4. I know we have CPI data this week. It might be, I don't know, I'm not going to say quiet necessarily. We've already had a pretty good jump from yesterday or last week's close. I mean, we've already jumped up close to $3 in the first 5 or 10 minutes of opening bell. So obviously I'm curious like where things are moving for the day. Big level at 449. Pressure to the downside. There's a pretty obvious gap around 446 to 445. It's 445 down to 442. If we're going to make some fresh lows this week, then that would be my target. It's right here in this green box. So that's another gap to the downside that could be filled for some additional efficiencies. We have pressure the downside here. Inflation data on Thursday, I'm sure that's an excuse for the market to move. If we go to Trueflation, let's see what the expectations are coming into Thursday CPI. So we're sitting at 2.31%. I think the last reported year over year was 3. If we go back to Forex Factory, interesting. This would probably be, so core CPI month over month, CPI year over year. I was looking at our expected year over year. You notice this right here. So previous was 3%, forecasted 3.3 this week. That is an uptick in inflation. Is that another reason to kind of scare the markets this week? Maybe. You know, just think about how a lot of this news can fall into place to drive the markets lower to find some of those bigger technical correction levels. It wouldn't be a huge surprise to see the market trickle lower. Okay. Now, it might do next to nothing, like we had a big sell-off on Friday. Friday was a pretty wild day. It was basically start the day higher, fill the gap, come back up to make fresh highs, and then come all the way down to the Thursday lows. So it was a pretty wild day. So because that's such a large candle, we might have some inside trading today and tomorrow. And then Wednesday with CPI data. Was it Wednesday or Thursday? Thursday CPI data. So Monday, Tuesday, Wednesday may be quiet. Thursday, maybe trades inside this NFP candle range. Maybe we break and push lower and fill some gaps. So I think if we stay patient for the news this week, I think the volatility opens up a little bit. The SPY is now pushing over $4 on the 20-day period average trading range, and the Qs are at 5.25. So decent volatility on both of the major indexes. And earnings-wise this week, I think I posted this in my YouTube channel or my Discord thread for analysis. Some notable earnings here. So anything that stands out that we have some ownership in, I think I don't have Paramount any longer. I did before. UPS, Under Armour, that'll be one that we want to pay attention to this week. I own some shares of Under Armour. SoFi last week was doing okay. Let's take a look at that. SoFi's at 945. We poked up on earnings at 11 and change. We still have a bunch of credit spreads at the 6x5. Under Armour is trading at 728. I own some shares around $7. Just going to wait to see if this is a bigger range trade. We're essentially buying this thing at 2020 lows and lower, and then we just have, I know it's retail, but there's just a good technical trade if we kind of accumulate down here and then we get a $20 to $22 price target on Under Armour, that'd be a nice little 2.5 to 3x return. So I do have the shares. Um, what I want, excuse me, what I want to put in additional credit spreads. We can take a look at that in equities on demand. So I'm just thinking, maybe a 8x7, try to grab 50, 60 cents. I don't think I want to take on more shares. I did end up taking more shares of rig last week. I had a 950x9. I got assigned. Um, it's okay. I'm okay with taking those shares. Actually, no, I didn't get assigned because it was a 950x9. We finished underneath, so I didn't take it. It was just a lost credit spread for 15 cents. Never mind. I still have shares of rig. We still have credit spreads that are the 10x9s that are in the money. We collected like 60 to 70 cents on those, and we've got those pushed out further in the year. Oil's been a pretty good story last month or so. I mean, we're trading at 82.20. Price at the pump has gone up. If you check the AAA gas prices, let me go to google.com, AAA gas prices. This should be nationwide. So $3.82 is the national average. If we go to take a look, what I'm saying is gas prices are going up, right? A month ago, they were 353. Current average is 382. A year ago, they were 406. So yes, they're lower than a year ago, but we have seen an uptick recently in gas, and that's across the board, right? A month ago, diesel was cheaper. Let's see here. Premium from 429 to 456, so everything's up about 30 cents. Even old corn, the ethanol at 284 now to 316. So another reason that we could see stickier inflation, right? The core CPI excludes food and energy, and obviously those are big contributors to how we've seen inflation, rear its head several times. Okay, so something to keep an eye out for this week on Thursday. Man, there seems to be some pretty good action early in the morning. 449 resistance, looking to fill a gap perhaps at 447. Just trying to be patient, but that'd be a pretty good trade right there at 449. See if we want to come back into 446 or 7. I'll just hang tight. I just hate trading like in the first 5-10 minutes of the day, but I had a great class on Friday last week for Delta Trader. I think I opened a lot of traders' eyes to just pricing out options and looking at some short-term opportunities and how we can use a really effective software to find our trades and plan everything. So it's been 15 minutes. I'm not forcing any trades. It's gonna hang tight, but I'll post in Telegram here shortly. Okay, morning Lewis, morning Chris, James, good morning. Trish, what's happening? How are you? Nice to see you. Let me post this here. Free group chat if anybody wants to pop in. If you're already in, obviously you don't need to join it, but this would be my Discord channel. And that link does not expire. So even if you're watching this recording, you can click on that link and still jump into the chat, say hi. So group chat is for everybody. And then I just post when I'm live on YouTube, blog every week, any Twitter posts that I'm looking at or any charts going into analysis. So that is that. If you want to shout out some charts or currencies or anything we can take a look at this morning, like I said, I was back here on oil. I think oil is by the dip with potential resistance becoming support at 75. We also may not see it do much of anything. It might just keep going higher. We might see that could be our our inflation popping back up again because oil heading higher. There's still a yearly pivot at the 94 level, and that's why I'm also we've had a pretty strong close now. We've had the 200 EMA acting as resistance for quite a while, since like August of last year, and it finally closed above that with several candles. It's hanging in there, it's drifting higher. So I think oil is a buy on the dip. Energy prices are recovering. We've taken a look at the sector performance recently, and energy's been one of the top comebacks. So the last month or so, here's the last month. Energy, you can see, is outperforming everything in a big way. Communication services, I think this is mostly Meta. I'm gonna go to index weight. Yes. So Meta had a big push, and it's 25% of the sector. So that's a little. It's not skewed, obviously. It's weighted. But I mean, because of Meta's push, plus you have Meta, Google, you've got two behemoths sitting at the top of this communication service holdings at 5.7%. But like again, looking at the last month, what's been the top performing sector? Energy. What was year to date? Energy was in the red in a big way. They were at -6 or 7%. The last month they've had a big rally. So year to date, utilities are still getting their butt kicked, but energy, healthcare has come back in a big way. The last month, the last 3 months, you can see that energy and financials both doing pretty well. Technology is still doing okay the last 3 months, but that was a drift as we got into our highs. Qs are, like I said, vulnerable to the downside, as are the SPY. I mean, correction wise, we're certainly vulnerable. We've had just an amazing first half of the year. And that first half of the year, I think since 2019, we had one of those great starts as well that ended up having a mediocre second half. So we had 2019, I think it was up like 19 or 20% for the first half, and it finished +7 or 8 for the second half. Before that, you have to go back to like 1989 to see a first half that was as good as we had in 2023. So it's been a pretty good year. Now, again, where do we finish? I don't know. I mean, I think a pullback is likely. I think Q4 typically is a bullish quarter for the stock market. Um, I wouldn't be surprised if the market's trying to gun for these all-time highs once again, and maybe that opens up a chance for another 10 to 15% rally. If we pull back into here and get up into all-time highs, maybe we have a 10+% rally towards the end of the year, which would be pretty fantastic. you know. And the bulls are shrugging off a lot of things, or the enthusiasts of the market. This comeback trade for 2023 is better than being bearish. So I think there's going to be a lot of volatility ahead, but um, we'll find out. So the Fed is not really doing much. I think their hikes are kind of in. Um, I don't know. I mean, yes, if inflation stays between 2 and 3% or 2 and 4%, I think the Fed can still pause because our rate right now is 5.5, right? 5.5, 5.25. So we're still quite restrictive overall with the inflation comparison, but higher for longer, pause for longer is kind of the phase that we're in right now. Okay. All right. Let's take a look at some other metrics. Let's go to the dollar index. Dollar index at 102 and change. Summer trading still. This has been kind of the cleaner chart that we've been paying attention to. It's the FXCM dollar index. This level here. So 12,637. Let me go back to the SPY. Got the wrong chart. Okay. So this is my short-term chart. I'll get some levels mapped out. This is the level I wanted to go US dollar right here. Okay. So support resistance. Dollar index maybe catches a couple of bids. If the market sells off, that's one thing we've seen. If the stock market sells off, expect the dollar to maintain some bid. For summer trading, that would make sense that the dollar pushes up a little bit higher. US dollar index, if you're looking at the FXCM measurement, 13,000. Okay, 13,000 would be, I think, where resistance can settle in. If we're going to have a stock market rally from there, then that's where the dollar gets pushed back down, possibly, longer term for the next 6 to 8 months as we go into like end of Q4, Q1 of next year. Uh, and I just don't want to discount this because we had this big slide on the dollar. We could also see this low, low. Maybe this stretches up and fills this area, and I don't think we're coming all the way back to the highs again. I don't think. Well, I don't think the stock market is going to be bad enough to see the dollar gain bid that dramatically. So I think if anything, summer trading in here, dollar catches bids, and then we go into September, October. If the market wants to rip, dollar gets weaker. If we're going to have a Q4, Q1 rally, and the stock market continues to push higher, then dollar index is probably taking some fresh lows. Okay, so we'll find out. Oil, gold, silver. Let's do gold and silver. Gold at 1937. It sold off that 1980 level like we expected. Again, you got to watch the dollar to figure out where gold's going to go. If dollar gets stronger, gold's going to continue to push lower towards this 200 EMA in the daily. Silver pushing down, but still in a bull channel. I looked to buy off of this bull channel levels around 22 to 22.50. Bitcoin very slow, vulnerable to the downside with a break below 28,500, and bulls really need to step up to 32. I think for right now things are pretty quiet, pretty slow. Um, there's trend line support in here, but we talked about this last week in the trading rooms. If we break this trend line, break this low, then we are, whoops, that's a little too far. Then I think we're vulnerable to the 20K mark again. So 32,000 highs, 20,000 support. As a trader, I'm certainly interested in buying dips. That dip would be pretty fantastic at 20. We go from 20 to 30 and stay in a bigger range. 20K to 30K is still a 50% move. Okay. So is that something worth buying and holding? Well, I think it's worth investing in taking a stab at it. Right. Currency wise, I'll just flip through some currencies here in a few minutes. Aussie CAD summer range, I'm still buying every time we score a point for the Bears. I'm going to buy those lows. Aussie Swiss, I'm looking to see if we can break a trend line and start making some fractal highs in here. That's not drawn very well. This way. So just being patient to see if we put in some lows. There is a Swiss National Bank rate decision coming in September. I'm still willing to take the Aussie Swiss down to 55 and 52.50 and 5,000 for a bigger turn, a bigger bottom. I don't know if we're going to get that low. I don't really care, but either way, I mean, we've had some divergent levels off this higher time frame slide. If we break this trend line, start making our way back up, I'm looking for on a lot of the Swiss pairs, and I talk about this pretty much every week in Flex. If I see a bullish pattern on Swiss pairs, I'm going to be looking to add positions to them. Okay, so whether I see, equal lows getting carved out, we rally back up here, form a head and shoulders or a crown, I'm going to look to add to that side of the trade. If we have a falling wedge and we start to break out, I'm looking to add to the confirmation of that trade. So it's pretty much the entire basket. The only trade I'm not taking on the Swiss is probably the Swiss yen. But Aussie Swiss I'm bullish, CAD Swiss I'm bullish, Euro Swiss I'm bullish, New Zealand Swiss I'm bullish, Dollar Swiss I'm bullish, pound and everything except the Swiss yen. I think the Swiss yen still has a good setup, but it would have to be, I don't really trust the Japanese yen for sustained strength right now, and the Swiss hasn't really budged. So neither basket is really easy to trade at the moment. JPY pairs, I keep telling traders all year, just follow your short-term alignments, and it's good volatility, but not the best kind of positioning trade. Swiss pairs, I think once we see some movement in the Swiss, we'll probably have a nice little maybe 3 to 4 week move, maybe a couple of months that we can get a decent push. Here's Euro Swiss, for example. If we had a double bottom, it'd be right in here around 94. So we could still drift a little bit lower. If we break this trend line, I certainly have opportunities to add to this to get back to 101. And I'm looking at a double bottom as this. If we hold here, push all the way back up to the highs, I get it. We could have a range, right? This could just come back up to 101 and then drop again. But if we break this high, I'm going to measure that to 105, 106. Because I take these lows, this is my center high, and I just project that up, right? So I do want to see how the Swiss franc unfolds, and if I get the patterns that I want, there's going to be a lot of pips to be made and a lot of money. But it has required, over the last year and a half, it's required a lot of patience. Taking some profit here and there, taking some non-FIFO trades here and there, but my overall positions are still being built and held. And really, the only reason I'm just willing to hang on to these trades, and traders know this in my flex room, is because it's positive swap right now. So going into September's rate decision, one thing with inflation on the Swiss, if we go inflation by country, they have had prints on their CPI data below 2%. 1.7 previous, 1.6 was the most recent. Their rate is currently sitting at 1.75. So they too are back in some restrictive territory where their real rate, their official cash rate, is higher than their inflation readings. The U.S. is in the same situation. Whether we have a 3 to 3.3% that prints this year for year over year, we're still at 5.5, 5.25 for our interest rates. So we're officially in that restrictive zone. The UK is still raising rates. The Eurozone is still raising rates. that they're not too far away. Euro area is at 5.3 CPI. UK is at 7.9. They keep raising rates. Let's go cbrates.com to see where everybody's at. Eurozone is at 4.25. So they realistically probably need, number one, inflation data to improve. Number two, they probably need to raise rates another, 100 basis points. The UK, probably another 200 to 300 basis points if their inflation remains sticky right now. Okay, does that make sense? Okay, so interest rates, inflation rates. We have inflation data this week for the U.S. I'll pay attention to that on Thursday. Pick your battles, obviously, and we got a lot of trading rooms and stuff to talk about this week. So, any questions for me? Any charts you'd like to take a look at in particular? If you do me a favor, hit the thumbs up button for me for the video. That would be much appreciative, or much appreciated, rather. And throw in the requests. Go some more currency pairs. Let's go yen crosses. What were the pairs we talked about last week? I think euro yen, pound yen were two of my favorites as far as the setup goes. We took some profit on the dollar. We'll see what pokes up for either some range trading, like Euro New Zealand sitting at 1.80. That was a pretty good looking spot for a sell trade right here. So we're sitting at these highs. I don't like the sell trade right now. I mean, this has been kind of making a rising wedge, and I think that we could get stuck in here. So you got to be careful because as good as this looks, the trade is the break. The trade is not, guessing that the top is in. That's not how this pattern works. So if we blow this top off, just be careful. So I'm looking more for the, if it's going to chop around a little bit longer for the next couple weeks, it would be that sell trade if we get it. Okay. But Euro New Zealand, Pound New Zealand both had some pretty promising looking sell trades. I just want to see a bit more confirmation and not get stuck. Same thing here. See how the Pound New Zealand's making fresh highs? So if you're looking to sell this, I want some confirmation in here. If it's a rising wedge, it's going to get really choppy. The sellers are going to have to see some clean confirmation to take it back down. There's a big pocket to fill. That's great, but I don't like how if you're selling here, maybe you get a little bit of action, but it's just not breaking any major structure. So be careful on those because they can just keep pushing. Boom. You could blow that top off, then put in the topping pattern. So just be careful in case that happens. That's not how I want to see a top form. Well, I should say I don't mind seeing a top form that way as long as I'm not shorting it. Right? That's what becomes difficult for a pair like this that can go from 2.1 to 2.16. I mean, it could go 500 to 1,000 pips really quickly and then rebalance. So I don't want to get stuck in that trade. That's my point. Okay, Aussie CAD. Yep, Aussie CAD. I still like buying dips on Aussie CAD. When I say buying dips, I mean when the bears are scoring points down here. So when we made a low, I bought that low. When we made a low here, I bought that low. So I'm looking for kind of this activity on the Aussie CAD right now. Kind of a range it's slightly downward, but I'm looking to see if it rounds out some lows at equal levels here. That's around 8,600. I'd like to see the Aussie CAD get back to this high. So what I'm looking for is if I can spot a bullish pattern, I'm looking to see if the Aussie CAD holds lows and gets back into equal highs. New Zealand CAD, Aussie CAD, I'm bullish on both. Outlook wise. Okay. So again, picking and choosing. If we make a low, I'm trying to buy those lows and see if we'll pop back up. A couple of spots is, we make a low, we come back and make a slightly lower high, grab your profit. Come back and make a low, make a slightly higher or a lower high, grab your profit. Eventually, the structure changes where if the bulls get the upper hand, then we can take that trade. Okay. All right, good stuff. That's Aussie CAD. Other crosses, dollar index. We're still short on the euro dollar. Actually, no, I take that back. We took profit on that last week before non-farm. Pound Aussie. I was looking for a sell trade. We don't have confirmation yet. Pound CAD. Don't like this one. Pound Swiss. It's off the lows at 1050. We were looking to buy that. I do like that support level. Pound Yen has a lot of potential. We just need to see more confirmation on the right-hand side. This could be something that's September, October versus August. Pound US dollar. Anybody shorted this at 28.50. Took profit last week. New Zealand CAD, same thing. This is a big correction. So this low, this high, I like how this correction's playing out. I'm starting to look for bullish patterns to emerge and then take this back up. So Aussie CAD, New Zealand CAD, I like the bigger structure to stay long. New Zealand Swiss, we just need to see some trend lines. Look at all these red supply zones. These are pretty crazy. These are all supply zones to the upside. There's room, of course, to like a round number like 5,000. But man, if we put in a low like that, I will be stacking up some orders and just letting this thing run for 3 months, 6 months, whatever it takes to push a 500 to 1,000 pip move. So actively looking for confirmation, looking for bull patterns. I just don't have them yet. But I think when we get one, it's going to be a pretty glorious trade. Plus, we have this, COVID crash low. If we're going to hold there, we might go a little bit lower, but I just like the opportunities to go back, right? I mean, if I can create a position here between 5,300 and 5,000, and this pair ultimately ends up at 6,000, which is the middle of this range, or ends up at 66 or 67, you get positive swap plus a good trade. That is a multiplier for some good profit. So I do like the New Zealand Swiss a lot. The spread tax being taken on enter and exit. Spread tax? Tax? Or just paying a spread? I mean, New Zealand right now is sitting at what, 5.5, 5.25? What's their central bank rate? Brokers, I mean, liquidity providers and brokers are paying positive swap right now. CB rates, and I've got to switch over to class here in just a minute. New Zealand's at 5.5. Switzerland's at 1.75. So it's positive rollover that you're getting paid every day. Some brokers still have that double and triple rollover on Wednesdays. So I mean, it's positive swap. Again, I'm not saying this is the greatest trade ever. Reason why is if it's going against me, I don't care if I have positive swap. If I'm watching pips move against me and drawdowns getting bigger, that's not good. But it'd be the same as, if the SPY's dropping and I want a dollar cost average into it, I'm working this kind of the same way. I'm kind of dollar cost averaging into those declines, and I'm looking for price, to essentially not go to all-time lows and stay there. There's a reason that we've had a big bounce off of here. There's a reason we have some technicals in the Forex market that I think are going to play out. So it's positive swap. Yep. So you pay the spread to take the trade, but I get positive swap. And it's to the tune of, 3.5% for the year, which is not everything, obviously, but it's better than holding and getting charged. I mean, that was what happened last year is I was in positive swap trades and I'm still paying the broker, which was super annoying. And that was a big frustration that I had in Forex trading last year is seeing all these central banks raising rates for the most aggressive, cycles we've seen in 20 years. And yet you're still paying brokers and liquidity providers, which was garbage. So, but that changed this year. So dollar CAD, yep, let's take a look and then I'll switch over to class. Dollar CAD 33.79. I was long dollar CAD at 32.90. Took some profit prior to non-farm payroll around I think it was I don't know what it was. Let me check my flex stock real quick. It might have been less than 100 pips. I think we took over 100 pips on the euro dollar. Oh man, I need to up. So I had a huge week last week in robot trading. It was like 4,000 pips. Dollar CAD, if we get a pullback, I'm still going to go long. I protected profit there for 68 pips. I was looking for the dollar CAD to get up to this yellow box around 34.50 to 35.50. So I think we again just have some summer range trading where this 32.50 zone is held. We might still have this if we have a pullback and another swing. Maybe a 32 to 32.50 pullback looks good. Otherwise, it just drifts higher, higher, higher. Once we're in this yellow box, I'm taking some profit if I'm long. There's a big pocket right here. We might come all the way back up to this high as well. We come back up to like 38, 39. I think that looking short dollar CAD is good too. Just a range trade. So. Okay. John, are you talking Forex? I mean, you're going to pay the spread regardless, right? I mean, if I have a bid ask on the New Zealand Swiss, for example, if Let's say that the trade's at 5,300 for the bid and 5302 for the ask. I buy it at 5302 and I don't care anymore. You know, it's like, can I cover those 2 pips? Sure. If that's all you're asking. So the spread is just part of doing business, man. I mean, you pay spread in Forex. You trade equities. You're either trading commission free or you're paying like an entry exit commission. Options, you're typically paying. I know like Tastyworks is like $1 for options, and Interactive Brokers is $1 to $1.30 for options. But in Forex, you're paying the spread, and you can either have that raw spread where it's like, maybe it's a point 0.6 or point 0.8 pip spread, but then you have an entry exit that works out to be about the same, or you just build in the spread and you pay that 2 to 2.5 up front. But once the trade is in, like, who cares? And it's positive swap from there. Okay. And then Aussie Swiss, we already talked about that one. Aussie Swiss, I'm just going to hold, big levels that I'm watching. 56 and 53 are the big levels I'm watching. That would be back here to our COVID crash lows. That's 53. So if we have a double bottom, what a great spot for it right here. So if it goes a little bit lower, watching this high, we put in a low, we come all the way back up here. I want to be long so bad on the Aussie Swiss that it would be, I mean, that's nearly a 2,000 pip trade with positive rollover. It doesn't really get any better than that. Obviously, I want to see price cooperate and not just fall to 0, which it won't, but I still need to actively spot where that low is going to be. Okay, CAD Swiss. I feel like everyone just came in and asking the same thing we've already talked about. CAD Swiss, I'm still long. Okay, we're back to equal lows. I want to see CAD Swiss take out a high. So if we can hold these levels, great. Come back up here, get on the right-hand side of this 200 EMA, and then make our way back up here to 71.50 to 72.50. I'm still long CAD Swiss. Okay, I'll be very clear. I'm holding everything long against the Swiss. The only pair that I'm not in is Swiss yen. But I'm long Aussie Swiss, Euro Swiss, CAD Swiss, New Zealand Swiss, Pound Swiss, Dollar Swiss. Small positions, building positions. Once I spot, better patterns and more confirmation, then I'll add more to them. But I've had my eye in the Swiss basket for a long time. Okay. Yep. And if you're stuck, I see Ant's comments. If you're stuck, you got to trade smaller. You can't. You can't over leverage positions. I treat the Swiss pairs like an investment. They are an investment. To me, it's positive rollover. That's my first play, and then from there, I look at the higher time frames and I just say, what big levels would I be willing to reinvest and get more skin in the game. But overall, I probably have for all the Swiss pairs on like a $50,000 account, I probably have maybe, I don't know, $10,000 tied up in Swiss pairs. Not in drawdowns. I'm just saying, like, as far as margin, I probably have like 10 to 15% of my account allocated to that position into all those currency pairs. And traders know this in my flex room. We've been very patient, and we've taken some non-FIFO trades when they offer themselves up. CAD Swiss is non-FIFO right now for a couple of entries towards 68 to 6,900. The dollar Swiss, we took some non-FIFOs to 8,800. So we pick and choose when we can take some short-term trades, but otherwise I just maintain and hold. And I probably have 30 to 40 open trades right now in Swiss pairs, but they're all small, and I'm willing to add back in. I've got plenty of leverage and margin to take more trades. Okay. All right, it's 10:10. I'm really late for my class. I got to go. We're going to switch over to equities on demand here. Final notes for today. We have over 1,000 companies reporting earnings. We have CPI on Thursday. So we'll see if the market gives us something exciting in the first few days. Otherwise, just wait. Thursday, Friday should be pretty exciting. We'll see where the market wants to go. Like I said, correction levels wouldn't be a huge surprise. 23 to 38% fib. Weekly averages, by the way, are somewhere between like $11 and $12. So if the SPY is going to make good on that, then we could be pushing at this point, very quickly on the structure, because this low was taken out. You can see even that rip back the non-farm payroll and rejection. That makes me think that directionally, the bears are in control at the moment. Right? We took out this low. We tested and rejected. So I think the bears have the upper hand to push this lower. And so I just don't want to get stuck. I think this week, I mean, we could have a pullback, and then the bigger direction is fading. Pullback, bigger direction fading. And we'll see if we end up finishing down in this yellow zone for the week. If we do, that goes according to technical plans. I also think there's going to be some interest to buy those dips. Okay. So we'll be trading as usual. Okay. All right, everybody. I'll switch gears. Equities on Demand students, let's jump into the trading rooms. And everybody, I'll see you in Discord. And we'll be back on Friday for YouTube at 9:30. Okay. Let's have a good week trading. I'll see you in the trading rooms. Bye.